Three, two, one.
Welcome to Inside the Hive with Kyle and Brandon. Join us as we explore business, real estate, current events, and personal growth. We dive into the latest trends, offer valuable insight, and share stories. Thanks for tuning in. Sit back, relax, and enjoy the show. Welcome back to Inside the Hive with Kyle and Brandon. And today we're breaking down the 14 billion square feet of retail in the United States and what's happening with it, where the opportunities are, how investors should be thinking about retail real estate in 2025.
And why retail? What has changed over the last couple decades here? Why go into retail? What is the benefits of that? Let's rip some stats here.
Yeah, I think that this is a good topic because for a long time we've been hearing that multifamily is the hottest thing, and then it was short-term rentals, Airbnb and Vrbo and those, and now that's this hot thing, and then now people are jumping into self-storage, and I heard boutique hotels. It's always something kind of new with real estate, but retail right now is in its prime, and people don't realize it.
Yeah. It's a basic math problem, too.
Yeah.
When you look at nationwide vacancy rates below 5%, that's usually an issue. Things are tight.
Yeah.
And they've been demolishing retail for since really probably the Great Recession, maybe before that. Big malls, demoing sites in central business districts where, maybe it's a little strip center and they end up building the high-rise multifamily or something. We have a housing shortage. So you've got this compressed need for retail now. No one can find good spaces. Even some stats here that we've had a decline of 54.3 square foot per capita, a decline from 56 in 2009. So you're talking over 10, 15 years.
Yeah.
You've lost square footage of retail, which is then tightening this, and people are wanting this experience and go out to eat. And
I have some theories about that. I mean, these are just anecdotal theories. There's no data I've read on this, but I assume this is what happened. For a while, when Amazon came out, which is another side fact that from 1960 to 1999, which is over 50% of the retail in the United States, was built before Amazon. When Amazon started coming out, started making a name for itself, online transactions and retail were happening, it scared the retail industry.
Yeah.
So new builds weren't, it's like, no, you don't want to build retail anymore. You see JCPenney's going out of business. Sears is going out of business. These big boxes are going out. The malls are empty. We don't want to do retail anymore. So that new construction wasn't happening.
You've been reading that for the better part of a decade more now. Retail's dead. Exactly. It's all moving online, guys. The malls are dying and
100%
changed.
And
no doubt about it.
What was happening? It wasn't dying. It was transitioning. It
changing.
It was changing. It was evolving. So now, when you go to, if you're listening to this right now, and you have a local neighborhood center with a grocery store or something like that, look at the other tenants. What are they? Probably a hair salon, nail salon, Pilates, yoga, some fitness, some maybe a UPS store, or things like this that you can't order online that are activity-based. Tons of restaurants. Restaurants are now anchoring strip centers and retail centers, the big pads out front and stuff like that.
Yeah, since COVID accelerated the crap out of that with people just wanting to go and meet and collaborate and be around people because everyone was stuck inside. And everyone thought that would kill retail too.
Yeah.
In 2020. I mean, I think we were a little bit scared of that too.
I think we were, but retail is very resilient. It's proven to be. It's proven that experience of going out and physically being somewhere and doing something is something that human beings just want to do.
It's funny. I'm reading this book, The Psychology of Money, and it was talking about this. Humans are more like ants, wanting to be around people more than like a lion or a tiger who's a solo hunter and kind of by themselves. So we are around people. We follow the herd a little bit. But we need to be around people. We work together in offices, and we work together in places. We eat together.
Exactly. Well, look what happened. Just speaking of offices, real quick, is everybody was working from home, and now all the big companies are bringing everybody back to the office because it's more productive.
Yeah.
Human beings and that interaction between people is very important just for society, just for life. And I think retail centers provide that. They provide a place to go to dinner, go to lunch, to where you have a birthday party or a date, where you're going to meet friends, where you're going to do this. There's everything from the place you get your hair done to the local bar is usually in some sort of retail center. and it's never going to change and it's never going to go away. And I think it's had multiple things that they thought would shutter it, such as online commerce
Yeah,
and
e-commerce and
COVID and things like that, but it just didn't happen. And but now there's also not the new construction that you would think about for retail. There's some large shopping centers. Everybody knows probably right now they're thinking of like one big development. When was the last time you saw a strip mall get built? When
yeah,
was the last time you saw it almost doesn't exist. It's
yeah.
like there's no little strip malls being built anymore. That stuff's already existing product.
Yeah, the average age, some fun stats here, 32 years old as of 2023, 2024 of a commercial building. So you got to think that's the average age. So you've got anything from 30 to 60-year-old buildings now. That's when the retail boom was happening, right? All through the 60s and the 70s and the 80s. Big construction boom for retail real estate.
Strip malls are the new multifamily. It's because there's less headache, there's less turnover. You have credit-backed, publicly traded tenants in some of your centers. Triple net leases, so you're not paying the expenses. There's no rent control laws. It is the better investment and the bigger bang for your buck. And multifamily, I'm not on board with it anymore at all.
Just like we had a housing shortage over the last decade, we now have a retail shortage. When vacancy rates go below that 5%, that's when it's time to start building. Oh, we can't build? Well, we're in the redevelopment era now. We're in the renovation era. Most shopping centers, the average age is 53 years old, prime for redevelopment. Probably haven't been touched for 20 plus years.
It's pretty good vintage right there. 53 years for a building. Yeah, that's a lot. I think if you bought an apartment complex in the last 3 years, you're regretting it pretty strongly right about now. I mean, apartments are just getting squeezed, and that was the big investment. That was the big investment push for a lot of people. That was like
coming out of the recession.
That was like a trend. It was like everybody's investing in apartments and then investing in, I know industrial just had a nice little boom right now. There's still a shortage of industrial. I think people, if you can go buy a few acres and go build a giant industrial building right now, more power to you. But I think that takes a lot of capital to do.
Yeah.
And I think a little lower hanging fruit is strip malls, neighborhood retail, grocery anchored centers, little things like that. I think are just prime for redevelopment, and it's the best investment you can get with the highest cap rates and easiest barrier to entry.
Yeah. And right now our rents are accelerating, where you've got multifamily rents actually decelerating. There's risk of overbuilding multifamily. I don't think we're there yet, but I'd say on the horizon over the next 3 to 5 years, you could have some markets that are going to be overbuilt, which means now you can't lease out your apartment units. Rents are going to be coming down. You're not hitting your performer rents. You name it. But retail, we're not building more retail, and it's harder to get that stuff approved. Main and Main corners are taken already, right? They've got gas stations on them. They've got retail on them. There is new development, but it's kind of out in, places like Phoenix where it's expanding out east and west. It's in the Inland Empire of California where we're building new retail. But other than that, it's the redevelopment era.
Yeah,
that's what we're here for.
I agree. And when it comes to retail, every specific asset class for real estate investing has a trick to the trade, I like to say, right? And with multifamily, how much can you renovate per door versus how much rent can you bump it up, and you can do this or do that, or if it's already 90% occupied or something like that, that's a good investment. There's all these different things to do with different asset classes, short-term rentals, vacation spots, hot spots by the beach, things like that. When it comes to retail, the key to it is pre-leasing, and there's a safety factor in there that's already baked into the asset, which is if you tie something up or you're looking at something and you go out and you get LOIs from tenants that are interested, for a fact what people are willing to pay rent-wise for the space in your center. Then you can adjust your offer accordingly back into a construction budget and so forth. And there's not any speculation. I believe that neighborhood and strip mall retail eliminates speculation. And speculation to me, is just risk. And that's what people that's what people lose their ass.
Yeah, and you hit on the head with the retail. The key is the pre-leasing. And I think that is your safety factor of, will this, if I build it, they will come factor. That's not happening in retail. You can go buy something, I guess, all cash, but you're not going to be able to put a loan or debt on it until you have some 50, 60, 70% of leases. Sometimes they don't release certain funds until you've gotten a certain amount of leases. And you've hit it again, where on the leasing side of retail, the safety of these long-term leases. Of course, everyone can go bankrupt and you can have some issues there, but you're not turning over rents, every year or something. You've got these escalators in there, but you're putting in corporate B2B tenants for 10 years plus. Sometimes they've got options. They might be there for 20 years. So big difference between this and multifamily, where you're turning stuff over. If you hit a bad economics time, maybe half your apartment's vacant now. At least you've got some legalities here where you've got this thing leased out for the next decade. You could weather some storms. You might need to do some renegotiations, but
And that's a big thing too, is the lease structure. I mean, when you
it's
have,
huge.
let's go back from the shortest one, short-term rental. That's a weekend. You got 2 days, and you got to be hustling to bring someone in the next 2 days, the next 3 days, and you're constantly cleaning and the turnover. And it's a hotel.
The weather's bad.
Yeah,
For a month or something. Who knows?
exactly.
In
All
that
of a
type
sudden,
an
it's
area.
not prime time season.
Yeah.
Now people aren't coming to your short-term
You're
rental.
not hitting your numbers.
Yeah, and look how saturated it is. So now look at that competition of, it's like a hotel, so the management is very intense, and the competition is extremely intense, and people can buy one right next to you. You buy one on a street, someone can have an Airbnb next door
A
to
lot of
you on
competition.
the same street.
Yeah.
If you have a retail center, nobody's building a retail center next door to you. That's just not how retail centers work. It's like you don't have, one, and then all of a sudden someone's building one right next door. It just really doesn't happen that way. There's less competition in that way. You see people willing to invest in publicly traded companies, and you invest in a Starbucks, invest in these big publicly traded retail or restaurant entities. Well, why not invest in the real estate that these entities pay rent to?
That their leases are backed by a corporation worth
It's-
100, 200, $1 billion.
Yeah, you like Chick-fil-A. Why don't you own the real estate that
Yeah.
Chick-fil-A rents from you?
Yeah.
There's your investment in that brand, and I just am more comfortable with, instead of an apartment or a rental or just someone that's very it's 2 days, it's a week, it's a year type of rent structure. For retail, for these centers, it's the minimum we usually have is like 3 years. Typically, it's 5 to 10. The average that we have in all of our centers is 10 years. So you have a 10-year term, built-in escalators, as you mentioned earlier, that every single year. You now have there's security to that, so someone's going to be there. You're not going to be scrambling when it's vacant. And then the lease structure is a triple net. So people that aren't aware of that, is when you have an apartment complex, those are just typical straightforward gross leases types of things, and it means that you as the apartment owner are paying for the expenses. They even teach that when you underwrite an apartment, you take the revenue and then you minus just 50% right off the bat of what it would be, and there's your estimated NOI. Without getting into a pro forma, they just say take 50% of the revenue, cut it in half, that's your true NOI. So as an apartment owner, there is a ton of expenses in
Well,
management.
you're responsible for the management of that. You got to pay those expenses and
Yeah.
perform those expenses, maintenance and electric and gas and water and landscape. Like, you're responsible as a landlord to cover all that.
Exactly. And retail is just historically almost always triple net type of leases, which means they pay for the common area maintenance, they pay for the property tax, and they pay for the insurance.
Yeah.
So they basically pay for everything. If it's absolute triple net, your tenants are paying for everything. It's just a pass through to them, and professional management on top of it.
Yeah.
So that right there makes it a very passive investment, very low risk. You have long-term leases, so you don't have to scramble every year to find somebody new. It's just I think it's just like going to be the new wave here soon, is redeveloping retail. I can see it.
Yeah, I think we're on the beginning stages of this. Coming out of COVID, we're 4 or 5 years out now, I guess, but really getting our feet under us the last 3 years, let's say. And everyone's saying retail's dead, the malls have been dying, but with these record low vacancies, no one's building new retail. I think we're on the beginning stages of a nice cycle, maybe a decade long, of just redoing what's already out there, reimagining it, putting new restaurant type tenants, more experience driven, more Amazon resistant. We talked a little bit about that. If that's what people want to see. I think we're just on the beginning stages of this, just like multifamily was in 2010. You know,
I agree with that 100%.
here we are.
I think I mean, I don't want to talk about it like it's a new technology, but it is but it's almost a new, not fad, but it is the new cycle. Real estate's cyclical. It's always going to be that way. It always has been. And typically, when you hear about a cycle, it's always about new construction. And new construction is right. And right now, there's tons of housing being built. I mean, I don't want to take away from that. I mean, there's a housing shortage in California where we're taping this right now, and a lot of other areas. And there's housing being built. I mean, I see it, right? But some of the other asset classes, there's not a huge boom right now of them being built, new construction. There's some are. I can still go see a giant retail center being built close proximity to here. I can go see industrial, but for the volume play, it seems that redevelopment is now coming to the surface.
That is the biggest play in retail right now.
It is. Everything at 14 billion square feet, and almost all of the product is between 30 and 55 years old, I believe.
Yeah.
That stat right there is just wild.
Just ripe for redevelopment.
Yeah, that is what ripe for redevelopment is right. Once a building gets over 30 years old, that thing needs a facelift. That's just how it is. There's no building that's 30 years old that doesn't need some TLC.
Yeah. No, retail is not dead, but it absolutely must evolve. You know, food and beverage, restaurants, breweries, food halls. Really just the change of consumer expectations. People still want to experience things, but they just want to do more than just traditional shopping.
I agree with that. I think retail real estate's been around for decades, but the playbook has changed. And how investors are making money, it's not through big box and department stores. I think that part is dead or dying. I think big box and department stores are pretty much on the way out, except for maybe your Home Depots and your Lowe's. I don't see Target really going anywhere for some reason. Everybody loves that, and Walmart. I mean, there's some big ones that are going to stay. People just like to go to have that experience and be hands-on with it. But I don't see.
I mean, and those big
Beyond.
box ones almost act as kind of a last mile distribution as well, because they've got the space. They're storing things to actually ship it to your last mile. So they're kind of hybriding them a little bit. They're carrying a lot of inventory, but you do get to go hands on, look at the speakers or the clothes that you want to buy.
You know what? That's an excellent point. I didn't really think about that. You're saying that the big box that's still active right now and still doing well is almost like last mile distribution.
Yeah, I've seen other landlords take some of these big boxes and actually lease it out as industrial. But I just had an experience with, this is what I'm thinking about, is I literally ordered something online at like Target, and they're like, oh, but you could just go pick it up here. And I'm like, well, look at that. They didn't have to ship it to me. I could drive a mile down the road. I didn't have to go shopping for this and test it all out. I knew exactly what I wanted. I pressed the button, and it was just sitting there waiting for me. I could have waited 3 days for it to come to me.
I can't believe you and I never talked about this before, because that just kind of blew my mind for a second. You're 100% right. The ones that are still actually thriving.
You kind of think about who they are. You named the big boys.
Yeah. And
maybe they're using it as that, maybe not, but at least
it seems
not
like
all
it stay
of them,
afloat with it, because now you have like you said, a hybrid approach.
Reason for it.
Yeah.
I mean, Walmart's got massive distribution centers and things too, but this is that last mile. During COVID, I remember even ordering stuff at Walmart and being able to just go pick it up, right? They pick it off the shelves, but they had the inventory stored there.
Yeah.
Which was different than, ordering on Amazon. I had to wait a few days and
I remember that.
And all that stuff. So
yeah, I remember that. Oh, interesting. And then other big box or similar medium, like Bed Bath and Beyond, or something like that. They're all going out of business. That's just like, I see those going out of business. I see Hobby Lobbies and all these other ones that are just not doing so well anymore, or they're getting restructured. So someone figured out how to crack the code. Some of the bigger ones.
Yeah.
Interesting.
Yeah, or reimagine them, right? I think the demand is stronger than people think, but I think you just got to reimagine those big boxes. Split them up, food halls, or whatever they need to become, or you demolish those and build something different, but in the retail environment still. They just need to be rethought. That's all.
I think for some of the big development players, there's an angle. of taking down some of these big boxes and repurposing them and adaptive reuse type of things and those type of plays.
Yeah, big play on that.
For a smaller investor or someone getting into this for the first time, let's say that there's someone listening right now that has bought small apartment complexes, 4 units, 8 units, 12 units, things like that, maybe a 30, 32 or something. And they're doing that, but they're just not getting the returns that they wanted. And it's just harder and harder. Now the competition is getting really stiff competition every time. I mean, it's just a really difficult a difficult business model now as apartment complexes. Jumping into retail, I would suggest like a small strip center.
Yeah, I'd go for that 1970s, 80s, 90s era shopping center in a prime location.
Yeah.
High traffic counts. Ideally some good demographics, major highways, urban centers.
Yeah, and you could buy it when it's fully leased up and then have what's like a value add type of play where it's fully leased up right now. It'll be cash flowing when you buy if you put enough down type of thing.
Mm-hmm.
And then you're slowly turning rents. Maybe, hey, this guy's only paying a buck a square foot, but everybody else in the whole neighborhood's paying $3.
Yeah, and what a jump that is.
Yeah.
Really,
So
think
now
about
you're
that on a percentage level.
You're essentially doubling rents. And when it comes to apartments, you're not going to buy an apartment and all of a sudden double everybody's rent. There's laws and stuff like that. And I'm not saying to take some small business in a town and just whack them day one and double their rent. That's not really what I mean. But if a business can't sustain paying a market rent, they really shouldn't be a business. It's
just bringing them up to market.
Yeah, they're just operating as a business in order to pay their rent. That's all they're doing. It's kind of like a cycle. They're not really a profitable business that's doing well or in serving the community. So taking that into consideration, there's a lot of opportunity. Well, I guess retail isn't what it used to be, but I think therein lies the opportunity. The people making money in real estate today are the people that know how to adapt. And this is one of the biggest opportunities I've ever seen in real estate. It's just, I think it was under the radar. Little people and it's undervalued. So
yeah,
it's a big opportunity. If anybody wanted to take advantage of it, this is the one.
I say the days of building massive new shopping centers are probably just largely behind us, but the biggest wins in retail right now are just breathing new life into existing properties. I mean, billions of square feet, aging across the country. So anyone that can understand how to reposition, redevelop, and adapt, I think you have some incredible opportunities in the years ahead here.
100%. If you are banging your head against the wall right now, trying to find a multifamily deal that's above a 5 cap, switch gears.
Yeah.
Switch gears and get into something that is just low-hanging fruit, ripe for the picking.
Yeah.
Stability, the low risk, and large cash flow. So
yeah.
If you found this helpful today, follow us for more insights. Subscribe to our podcast at Inside the Hive with Kyle and Brandon. And check out our mastermind if you want to learn how to transition from multifamily to retail investing.
We're here to teach you how to do retail right.
All right. Thanks a lot.
Thank you.